You know, if you're a technical founder, you live with this constant tension. On one hand, you're building something amazing, something really innovative. But on the other, the pressure to get funding feels like it comes with a huge price tag, giving up control of your own baby. So that leads to the one big question.
Yeah, this is the one, right? The question that probably keeps you up at night. Does getting funded have to mean signing term sheets that just chip away at your ownership piece by piece? It feels like a massive dilemma, but you know what? The answer might not be what you think.
And let's be honest, you've heard the standard playbook a million times. The whole startup world seems to be on this one single track. It's the default setting, the story that gets all the press. But what if that's not the right path for you? What if that's not the company you actually want to build?
Well, that's exactly what we're going to dig into. We're going to map out a completely different route. It's one that puts creating real value and keeping founder control front and center, instead of just chasing the next big funding round. It's all about building leverage before you even think about picking up the phone to call a VC.
All right, so the very first move on this alternative path, it actually has nothing to do with cash. It's all about building a fortress around your idea, turning your tech from something that's easy to copy into a genuine asset that only you own. And this is such a powerful way to think about it. Are you building a code shop or an IP fortress? A code shop is fast, sure, but it's wide open. A competitor can just stroll in and copy your best stuff. The IP fortress, though, that's a business with a deep moat around it, protected by things like patents, creating real, defensible, long-term value.
Now, building a fortress sounds intense, right? But it really just boils down to 4 key steps. First, you've got to really nail down what makes your tech special. Second, take stock of everything you've built. Third, make sure your patent plan actually supports your business goals. And finally, you get the right experts in your corner to help you navigate it all. And that first part, it's not nearly as complicated or full of legalese as you might think. This quote says it all, really. The foundation of a strong patent is just a crystal clear understanding of what you've made. If you can't explain it simply to a friend, you probably haven't defined it well enough yet.
Okay, so your fortress walls are going up. Awesome. But now you need to fuel the engine, right? You need to grow. This next part is all about raising capital. And this is the key, doing it without giving away the keys to the castle.
And this really gets to the heart of the choice you're making. On one side, you have the traditional VC path, which almost always means diluting your ownership, getting new bosses on your board, and being under constant pressure for a quick, massive exit. The other path? It's about holding on to what's yours and proving the market actually wants what you're selling.
So what do these alternatives actually look like in the real world? Well, they're about way more than just cash. They're about building momentum and validation. You can go with crowdfunding, you can land government grants, you can win tech competitions, or you can just pre-sell your product directly to customers who want it.
Let's just double-click on government grants for a second, because this is huge. We're talking about non-repayable funds. Basically, it's free money to work on your tech. But honestly, the cash might not even be the best part. Winning a competitive grant is a massive stamp of approval from a third party that says, hey, what these folks are doing is legit and important. All right, here's a strategy that is so clever and, frankly, totally overlooked by a lot of founders. Capital doesn't always have to be green. You can fuel incredible growth by getting an investment in the form of crucial services and expertise. They're called in-kind partnerships. Think back to that IP fortress. Getting top-tier legal help to build it, that costs a fortune. We're talking serious cash. But imagine a firm offering you, say, 50 grand worth of their expert services, not for cash, but as their investment in your company. That's an absolute game changer for an early-stage startup.
I mean, just look at the real-world impact on your budget. Things like patent drafting or a freedom to operate check, those can bleed a young company dry. With an in-kind deal, boom, that cash isn't gone. It stays in your bank account, ready for you to hire that next engineer or run a marketing campaign.
Now, you can't just jump into these things blindly. For a partnership like this to really work, you've got to get the structure right. It means finding allies who are a perfect fit, building a deal where everybody wins, and, this is critical, deciding right from the get-go who owns any new inventions that come out of the collaboration. So let's zoom out for a second. You've built your IP fortress. You've landed some funding without giving up equity. You've got these brilliant partnerships. So what? What's the big payoff? Well, the payoff is that it completely flips the script if and when you do decide it's time to talk to big investors. When you walk into that pitch room, you're not just bringing a cool idea and a slide deck. No way. You're bringing a portfolio of real, defensible assets. That stack of patent applications isn't just a pile of boring legal documents.
It's proof. It's black and white evidence that you can solve a problem that other people can't. You've built something that isn't easy to copy. And that single fact, it changes the entire power dynamic in that conversation.
So think about how this all comes together. Your IP shows you have a moat. Using grants and in-kind deals shows you're incredibly smart with your money. All of a sudden, you get to lead the conversation, not them. You transform from just another risky startup into a clear, buttoned-up, defensible opportunity.
And this quote just nails it. This is the whole point of the strategy. It's about putting yourself in a position of strength. You are in the driver's seat. You're talking to investors because you're looking for a strategic partner, not because you're desperate for cash to make payroll next month.
Because at the end of the day, that's what it's all about, right? The goal was never just about cashing a check. It's about being strategic, about protecting your vision, and about building a real, sustainable company that you're still in control of, a company that's built to last.
So, I'll just leave you with this one question to think about for your own venture. What are you building? Are you building a temporary code shop that's just running on speed, a business anyone can replicate? Or are you laying the foundations for an IP fortress that no one else can touch? The choice really is yours.